All my friends are buying crypto. I feel like I am missing out. Bitcoin is already 46,000. Ether has crossed 3,100 again. What should I buy? Oh wait, I am a genie. Like you, even I can consult a crypto expert. Wait, let me find out who can help me. Oh, Yashika. She looks like a crypto expert on this subject. Let me ask for her help. Oh wow, you guys in crypto too? Ha 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 ha! Jai Bhum ha! Jai Jinendra Yashika. I am Binny and I want to invest in crypto. Can you please help me? Oh wow, you guys in crypto too? Wow, interesting. But let me finish the video on how to look out for a good crypto. Just wait, huh? I want to learn that too. Maybe I'll check out her next video on YouTube. Yep, I'm ready. Let's go. Yep, let's go. Abracadabra. So Binny, tell me, what's your goal? You want to be a day trader or a hodler? What are these terms? I only know I can get rich in crypto very quickly. That's all I want to do, and I want to flaunt or want to show off my money in front of my friends and family. Undoubtedly, investing in good crypto can earn you good amount of money. But in short term, markets are subject to volatility and high risk. So my advice would be, research enough, be patient, manage your risk and strategize your investment. If you follow these steps, you will for sure be much better financially in the future. Wow, that's such a golden advice. So what's the difference between a day trader and a HODLer? Hold on for dear life. One who invests in crypto and holds his portfolio dearly for a long time. He buys crypto, holds it for a long time, like months and years together, makes juicy profits and sells later. On the other hand, a day trader takes advantage of the volatility in crypto market. All through the day, he buys crypto at lower price and sells it for profit at higher amount. He devotes his entire focus on studying charts and waiting for the right opportunity. Oh, that sounds too much work. Well, if you understand technical analysis, then you can employ modern day artificial intelligence solutions like trading bots and save yourself from awful screen times. But you should know which coin or token to put your money in. So play it safe. Okay, let's say I'm a HODLer. How should I begin? Great. The first step is identifying how much money you want to put in. You can park the fund you're not going to use in the near future. Word of caution, don't gamble with all your savings. Be wise to strategize. Oh, makes so much sense. So the question of how much is done. Now comes the burning question which all of us have. Which coins or tokens should I invest in? Binny, that topic deserves a video on itself. In fact, my next video I shall cover everything you should check before investing in crypto. So, if you have still not subscribed to her, do that to up your crypto investment game. Okay, but let me give you a bird's eye view on which crypto to invest in. Okay, wait. Let me guess. I will join Twitter, follow celebrities, and then buy whatever coins they tweet about. Yikes! That sounds like a disaster recipe to me. Don't do that because someone else recommended it. Do it because your research backs it. Because you believe in it. So coming back to the strategy, divide your crypto portfolio in 3 parts. A. B and C. A means the A class, the time-tested crypto like Bitcoin, Ether, जिनका नाम ही काफी है, These really have good utility and awesome use cases in the real world. B means the booming class. These cryptos have been around for 1 to 2 years, have been traded actively. The founders and developers are doing great job in building up on use cases, and they have promising future in terms of the solution they provide. C means the catch me fast crypto. These cryptos are the ones that have heavy risk involved. They may be moonshot, in which they may rise to 100x or even 1000x. They are very much hyped in the market, but they may lose their charm sooner and also may go for a toss. Oh, I have taken a complete mental note of this such an important point. So what should be my proportion of investment in A, B and C? Keep 50 to 60% of your investment in A, 20 to 30% in B and 10 to 20% in C. Voila! You're good to go. Oh, that's smart. But the market is so volatile. How do I time my entry into the market? You never know what low is the lowest and what high is the highest. Okay, let's say you plan to invest 1 lakh rupees. Given you have that sort of savings and risk appetite, you go ahead and purchase crypto with that lump sum amount. And if market falls, you may lose out a lot. So lump sum strategy isn't wise at any amount. Now even if you don't have that huge amount of money to put in, you can prefer this widely used technique called dollar cost averaging, DCA, or for my Indian audience, rupee cost averaging.
So in dollar cost averaging, you decide what crypto asset you want to buy for X number of months or years. So let's say I decide I want to buy $20 worth Bitcoin every week. Irrespective of whatever price it is, I start on 1st April 2020. So I would have ended up spending $1,480 in the last 14 months and I would have gathered 0.09 Bitcoin, which would tantamount to $4,348 today. Wow, that's a 194% increase.
Dollar cost averaging or rupee cost averaging is great for beginners. If you don't know to time the market, it lowers your risk significantly and takes away emotions out of the equation. And it also gives you time to understand the market. If you're a beginner and want to learn more but don't want to wait until you're fully equipped, you can start with DCA and get to understand the market in the meantime. Oh, this sounds so simple. You really have the superpower of simplifying crypto for all of us. Well, there's one more strategy here. It's called Martingale strategy. Let's say I want to purchase $300 worth of Ether at the market price of $3,000. Okay? So if I was to average and buy, I would divide $300 in 4 equal parts and buy every time market went down by 10%. So at these prices, my final average price would be around $2,580. But in Martingale strategy, I would double up my investment price for every 10% decline in market. Like, I would divide $300 of investment into $20, $40, $80 and $160 respectively and buy when market went down by 10% every time. So my average cost of buying $300 worth of Ether would be $2,351. That's a whopping $229 difference between average cost price and Martingale's cost price of Ether. Wow! My mind is so blown with such fantastic knowledge. So I learned how to classify the portfolio in A, B and C using the 60-30-10 ratio and how to buy using the dollar cost averaging and the Martingale strategy. One bonus tip for all my audience. Usually, market also works on sentiments. Simply put, fear and greed are two big motivators when it comes to humans and money. For this reason, there's an artificial intelligence based indicator that says what is the market sentiment right now using the current volume transacted data, open interests, what people are saying on Twitter and Reddit, Google and Bing search data. This indicator is called the Fear and Greed Index. Hell yeah! What an absolute fantastic way to put market sentiments in perspective to a chart. Absolutely. If the market is in extreme fear, it means that the investors are too worried, which could mean a buying opportunity. When investors are getting too greedy, it means the market is due for a correction and hence it may not be a good time to buy. Thank you so much, Yashika. I am now wise to strategize. I won't fall trap into anyone's recommendations. I will minimize my risk by optimizing my strategies. Welcome to the world of crypto.